morning and welcome to the Morning Bell. I'm Robert, joined by Lizzie and Steve. It's Wednesday, April 8th, 2026, and we have a lot to cover today. Lizzie, what are the main themes you're seeing in today's news?
Thanks, Robert. Well, the dominant story that's really shaping market sentiment right now is the two-week ceasefire agreement between the United States and Iran. This has triggered a significant risk-on move across markets. We saw stock futures spike overnight, with the Dow futures soaring, as traders pulled back from the defensive positioning we'd seen building up over the past few weeks. What's particularly notable is how this is playing out in commodities. Oil prices have plunged below $95 after Iran agreed to safe passage through the Strait of Hormuz during the ceasefire period. That's a massive reversal from the elevated prices we were seeing just days ago. Bitcoin jumped to over $72,000 on this news, which is interesting because it's testing that safe haven narrative that's been developing around crypto. The dollar has hit a 4-week low as haven demand evaporates, and treasury yields have plunged about 10 basis points as sentiment improves. We're also seeing European bonds surge as traders trim their bets on interest rate rises. Now, hedge funds actually suffered some of their worst losses since COVID during the recent Iran war turmoil. So there's a lot of unwinding of defensive positions happening right now. Shell's oil trading division got an earnings boost from the volatility, but companies like Delta are already talking about meaningfully cutting growth plans and dealing with elevated fuel costs.
That's quite a shift in market dynamics. What does this mean for traders and investors looking at positioning for the rest of the week?
Well, I think the key word here is caution. Vice President JD Vance called this a fragile truce, and that's exactly how traders should be thinking about it. We've got 2 weeks, but that doesn't mean the underlying tensions have disappeared. For active traders, the immediate opportunity is in the unwinding of war premium across assets. We saw over $427 million in liquidations, with Bitcoin, Ether, and oil shorts leading the wipeout. That tells you how crowded those trades were for longer-term investors. This is a moment to reassess portfolio positioning. The knee-jerk rally we're seeing might already be getting ahead of itself. Energy sector positioning is particularly interesting because while oil prices have dropped, companies are still dealing with supply chain disruptions and elevated costs that won't disappear overnight. The insurance sector is another area to watch, as insurers have been building up a $1 trillion position in private credit, which is leaving regulators scrambling. I'd also be watching currency markets closely. The dollar weakness we're seeing could continue if risk appetite holds, but any deterioration in the ceasefire could reverse that trade quickly. The bottom line is that while this ceasefire provides some breathing room, traders need to stay nimble and avoid getting too comfortable with the current positioning.
That selectivity is definitely going to be key in this environment, Steve. Let's get into the economic numbers. What's the picture looking like from the data side?
Thanks, Robert. Earlier this week, we got the durable goods orders report on Tuesday, April 7th, and it came in stronger than expected. The actual reading was 1.4%, which beat the forecast of 0.5% and matched the previous reading of 0.5%. That's a positive signal for manufacturing activity, though. We need to watch whether this strength can be sustained given the geopolitical uncertainties. Now, looking at today, Wednesday, April 8th, we don't have any major economic indicators scheduled for release, which gives markets a bit of breathing room to digest the ceasefire news and position ahead of the heavy data flow coming tomorrow and Friday. Speaking of which, tomorrow, Thursday, April 9th, is going to be quite busy. We're getting the GDP report, which is forecast to come in at 0.7%, down from the previous reading of 4.4%. That's a significant deceleration in growth that markets will be watching closely. We're also getting the PCE price index tomorrow with a forecast of 0.4%, matching the previous reading of 0.4%. That's the Federal Reserve's preferred inflation gauge, so it carries a lot of weight. Initial jobless claims are also due tomorrow, though we don't have a specific forecast yet. Then on Friday, April 10th, we have a triple header of important releases. The Consumer Price Index is forecast at 330.4, up from the previous reading of 326.79. That's going to be critical for inflation expectations. We're also getting the Consumer Confidence Index, which is forecast at 52, down from the previous 53.3, and the University of Michigan Consumer Sentiment also forecast at 52, down from 53.3. Both of those consumer sentiment readings suggest households are feeling more cautious about the economic outlook. Factory orders round out Friday's releases with a forecast of 0.1%, matching the previous 0.1%. So we've got a light day today, but tomorrow and Friday are going to be data heavy, and these numbers will be crucial for understanding whether the economy is maintaining momentum or starting to slow more significantly.
That's quite a lineup ahead of us. Lizzie, let's shift our attention to crypto. What are you seeing in the digital asset markets?
The crypto market is definitely in an interesting spot right now. Robert, Bitcoin's move above $72,000 on the ceasefire news is significant, but I think we need to be realistic about what's driving it. This isn't necessarily a fundamental shift in Bitcoin's narrative as a safe haven asset. In fact, a recent volatility has really tested that narrative. What we saw was Bitcoin initially struggling during the height of tensions, then rallying on the de-escalation. That's more of a risk-on correlation than a true safe haven behavior. Looking at the technical picture, Bitcoin wallets have absorbed 4.37 million BTC as network activity has flipped to what analysts are calling a bull phase. That's constructive for the medium term. We also saw spot Bitcoin ETF inflows top $471 million, which was the largest single-day inflow in 6 weeks. Morgan Stanley is set to launch their Bitcoin ETF on Wednesday, which could bring additional institutional flows. However, Bitcoin is still pinned under that $70,000 resistance level. That's been stubborn. Some analysts are warning about a potential $15,000 shakeout over the next 5 months, which sounds dramatic but speaks to the uncertainty around Bitcoin's true role in portfolios. For Ethereum, the picture is actually quite strong. Stablecoin supply on the Ethereum network hit an all-time high of $180 billion according to Token Terminal. That's a really bullish indicator for network usage and DeFi activity. Ethereum buyers have been defending the $2,000 support level aggressively, and we're seeing solid accumulation patterns. There's also discussion about quantum-safe cryptography and whether it might slow Ethereum down, but that's more of a longer-term consideration. Solana has been quieter though. There was a cryptic message from the Solana Foundation that got people talking. The Solana-based Stable project also had to tell LPs to withdraw funds after identifying a former North Korean employee, which raises some security concerns. Overall, institutional interest continues to grow with Bitcoin. Ethereum is showing strong fundamentals through stablecoin adoption, and Solana is navigating some reputational challenges. The sentiment is cautiously bullish for Bitcoin and Ethereum heading into next week, while Solana remains more neutral until we get clarity on some of these issues.
Well, that wraps up today's Morning Bell. We've covered the market's reaction to the US-Iran ceasefire, the economic data ahead, and the latest in crypto markets. Remember, do your own research and consult with financial advisors before making investment decisions. If you found today's discussion valuable, please subscribe to the Morning Bell wherever you get your podcasts. I'm Robert, along with Lizzie and Steve. We'll see you tomorrow.